Welcome to the Capital News. I'm your host, Alex Kreitis. Today is Monday, August 31st, 2020. Thank you so much for joining me. Hope you all enjoyed your weekend. Title of today's podcast, Stock Splits, the Golden Ticket. And that's a question because finally the day of arrival has come. The stock split for Apple and Tesla both came to fruition today. And my, oh my, just as anticipated, the Robinhood traders and all the other idiots out there gobbled it up because they said, well, just the other day, Tesla's trading at, $2,000 a share. Now it's at 400 and something. Well, if it was at 2,000 a few days ago, well, what a bargain it must be today. This is what people think. And there's enough idiots out there that moved Tesla up 12.5 percentage points just today alone. And there's enough idiots out there that moved Apple up 3.4% today alone off of their stock splits. It's almost as if corporate America in Wall Street can't lose. Who would have thunk it? They do share buybacks for a decade amidst this perversion and fraudulent policy of quantitative easing. And they make out like bandits. They squander their resources because that's what they did. They financially engineered their stock prices with easy money, easy credit, even using their cash flows from business operations. Screw capital expenditures. Screw research and development. And of course, these things happen. You understand my point. But let's throw as much as we possibly can into share buybacks. Because over the past decade, the biggest purchaser of stocks was the corporations themselves. So that the executive suite could pay themselves handsomely because their compensation is tied to share price performance. Well, Bob, there's an easy way we can financially engineer it. You bet there is. How much is it going to cost us? Oh, very little. The Federal Reserve's printing money. Interest rates are very low. And we're not the ones who are on the hook for paying it off. It's the company. But we get paid. So let's do that. And that's exactly what they did. Made out like bandits. It's squandered. And now the American people are bailing them out. Because as Donald Trump will tell us, and many in Congress and the administration will tell us, it wasn't their fault. It wasn't their fault. It wasn't your fault either. But many Americans, millions, are still waiting for their unemployment insurance. So you do the math. But now you have almost the opposite with a stock split. And it's not quite the opposite because the true opposite would be an issuance of shares above and beyond to try to finance future growth or to help pay off debts, and they're doing it by share issuance. But nonetheless, this is increasing the number of shares out there, and this is what, and I'm going to say this is what speculators are doing. To use the word investors is not the right word. There is no investor out there who thinks that Tesla is a good value. They're speculators. There's just no way. Tesla is now the 7th largest U.S. company. The 7th. They just overtook Visa. It's everywhere you want to be. Tesla is not even profitable. I mean, they show a profit, technically speaking, but it's not from operations. It's from regulatory tax credits. This is a joke. Again, Tesla is going to be one of the poster children, there's many of them, for the everything bubble. They might be number one, I don't know. Kodak is in a very close second, going from bankrupt $2 a share to $60 a share overnight because the Trump administration says, here's $769 million that are your dollars, by the way. Let's just give it to this company that's bankrupt. You got it? You see who wins? You see how the game is played? You see the club? You're not in it? You get it? Tesla, the 7th largest company in the country. They barely sell any vehicles. Again, they're not making money. They're not even close to selling as many cars as any of the majors, let alone the entire industry. And don't forget, folks, it's not as if Tesla has a monopoly on electric vehicles. Mercedes is going to come out with them. Ferrari's going to come out with them. BMW, Ford, GM, Toyota, all of them. And those companies have brand loyalty. And they're going to come out with sharp designs and cars that have great performance. Yet let's continue to pile into Tesla. Now, more power to you if you got into it and you knew what you were doing, you understood that it was speculation, you said, I'm going to ride this up. More power to you. More power to you. I'm just, risk reward is what it's all about from my perspective. You do what you do, I do what I do. I'm just calling out the lunacy that is this market. And as long as you say, yeah, you know what, I am speculating, it's completely crazy, but I'm riding the wave, I'd have so much respect for you, it's not even funny. But for those who actually believe that Tesla is like some, quote unquote, the future, and it deserves to be the 7th largest company in the country, and these lofty valuations are completely justified, and you got some nut jobs that get out there on CNBC and others saying, oh, wait, $5,000 a share, $10,000 a share. What are these people smoking? And are they managing your money? If I saw somebody on TV who was managing my money come out and say something like that, you bet your rear end they're getting a phone call as soon as they're off the air. I want my money, all of it. All of it. Because this is beyond Looney Tunes. Beyond Looney Tunes. And don't forget, Apple is a $2 trillion company. So let's just look at this. We have people out there who think, okay, on Friday, I had a $5 bill. Well, that's cool. I have a $5 bill. On Monday, I have 5 $1 bills. Yeah, hey, I'm richer. That's what people think. That's what's going on here. And there was an interesting, I would presume this is a quote, maybe a proverb from somebody, but I saw this maybe a couple weeks ago on my Twitter feed, and it came across from Nassim Nicholas Taleb, who is an author of The Black Swan. I'm sure many of you have seen him on some of the financial media networks. And he posted on his Twitter account, he said, you know the fraud, not by the producer, but by the consumer. And I thought that was extremely telling. And I'm paraphrasing. You know the fraud not by the producer or the salesman, but by the consumer. And when you look at who is coming in here, the consumer being these speculators, these novice traders who can't find a job but can get on Robinhood, and it's commission free, as are so many other platforms. And let's just take our extra $600 a week or whatever we have, and let's just throw it into these stocks and hope for the best, because you can't lose. Well, let me tell you something. You can, and you can lose drastically. You can lose drastically. Now, maybe this time's different, but typically when you hear that statement, this time's different, that's when you run for the hills. And if you pay attention to the Looney Tune, CNBC and Bloomberg and Fox Business, I mean, the stories that these people have to make up to justify these valuations is laughable. They are doing such a huge disservice to the general public, especially those people who are looking to them to get educated as to how the economy functions, how markets work and are supposed to work. Oh, sure. Market cap to GDP 180%. That's completely fine. Go ahead, jump in both feet. Don't worry about a thing. Don't worry about a thing. It'll all work itself out. Don't worry about a thing. Companies with trillion-dollar market caps. Oh, don't worry about a thing. They're larger than countries. They're larger than countries. If you look at it from a GDP perspective. Oh, don't worry about it. Go ahead and buy with both hands and don't worry about it. It's all cheerleading. for a very corrupt and fraudulent system. And it is beyond reckless. And so many people are going to get wiped out, they're not even going to see it coming. And the other thing too, folks, if this is, quote unquote, this time is different, then the reason it's going to keep going up is because these are hyperinflated dollars. So when you take out all of your quote unquote gains and you look at them on a real basis, you're not ahead. You're not ahead. You're still losing. Now, depending on some of the stocks, maybe you are slightly ahead, or at least you're maintaining some of your purchasing power, but your dollars are rendered worthless. So is that really a market? And of course, the answer is no. But just so you understand that, Tesla, 7th largest company, don't make money, barely sell any vehicles, especially in the perspective of the entire auto industry. But they did a stock split. So, I mean, could you imagine if Tesla should get back to $2,000 a share with how many shares outstanding they now have? They'd be bigger than Apple. They would be bigger than Apple. At least Apple makes money. At least Apple has a ton of money on the balance sheet. But this is just unbelievable. I hope Elon Musk, the CEO of Tesla, is smart enough to start selling, because there's enough suckers that he can sell to. Unbelievable, but no surprise. Other market performance, we have the dollar index down below that 92 handle. It is now trading at 91.83. Again, this is the dollar index. Looking at a chart, this takes out the recent lows, basically that double bottom that we were talking about in the past couple of weeks. Again, 91.83 on the dollar index. There are some market commentators who think this is the end of the dollar and it's just going to continue its downward decline. That's possible, but I'm not so certain. I still believe there is the possibility for a massive counter rally in sort of the dollar's swan song. Now, I do agree and believe net, the dollar is on its death march. It's just a question of when that's going to happen. The U.S. dollar will lose its global reserve currency status. It's just a question of time. I mean, the graph I'm looking at right now of the dollar index, nobody can look at this, in my opinion, and say, oh yeah, it's just going to continue downward, no ifs, ands, or buts about it. There's been too much volatility. The dollar can still be seen as a safe haven asset, at least for a short time. And there is just an astronomical of U.S. dollar-denominated debt that continues to exist around the globe, and those debts are coming due, which means you need U.S. dollars to pay them off. That is a demand for dollars, thus potentially bidding it up. Now, of course, we have the Federal Reserve out last week throwing all caution to the wind. Screw our charter, screw our dual mandate, and in the process, screw you. But let's have everybody praise them and pat them on the back for doing everything right. Give me a break. So they got a lot of ammunition. They have the Banana Republic printing press. They can continue to put downward pressure on the dollar, and they are going to continue that. The question is, will market forces overcome that and create sort of this swan song where there's this massive counter rally in the U.S. dollar? I think that's a possibility. This is not me being wishy-washy. This is not me trying to hedge my bet. This is my objective analysis of the U.S. dollar. Net, it's dead. It's just a question of time. But in that process, there can still be that massive counter rally and a swan song beforehand. And that in and of itself, because we talked about this many times before, that dollar doom loop situation would be a doom loop. It would be very devastating. But so would be its decline, especially if it's a rapid decline, because so many of the world's commodities are priced in U.S. dollars. And because of the massive amount of money printing, inflation, because of the supply chain disruptions that are still ongoing, and I imagine even when they come back online, there's going to be a lot of hoarding within these respective countries. They say, we still don't know what's going on. There's still a lot of geopolitical tension. We're going to hang on to this stuff. We're not going to sell it. We're not going to sell it. I think some of that's going to take place. So you have these commodities priced in U.S. dollars. We talk in the supply shortages. We talk about the price of lumber, the price of copper, natural gas with a strong rebound, oil slowly but surely inching higher. I mean, is that really what the consumer needs during the Greatest Depression? Globally, higher commodity prices? Is that what is needed to solve this problem? Federal Reserve talks about getting inflation. Oh, it's here, baby, and it ain't going away. Remember, inflation, stagflation, hyperinflation. Hyperinflation already exists in other countries, so as does stagflation. It can be argued that stagflation's here because we have a stagnant economy and there is inflation. But hey, Apple and Tesla did some stock splits. You're now 5 times richer. Unbelievable. But against the dollar, we have the euro at $1, almost $1.20. The pound at $1.34. The Australian dollar at 74 cents. New Zealand dollar at 67.5. U.S. dollar to the Swiss franc is at 90 cents. I mean, this is not good for the U.S. dollar right now. It is not. But that typically indicates that that's still going to be a quote-unquote positive driver for U.S. equities to push them even higher. Let's see, right now in trading, cash trade in Japan is relatively flat across the pond, pretty much a sea of red. With the French markets down 1%, Spanish markets down 2.3% was the biggest loser. Cash trade in Australia is down 1.7%. This is probably on the back of everybody selling all of their stocks so they can go buy Tesla and Apple. That would be my educated guess there. Forget about the Greatest Depression and the geopolitical risk. That has nothing to do with any type of sell-off. They just want out of their stocks so they can go buy Tesla and Apple. That's all you need to know. Commodity front, we have WTI trading at $43 a barrel. Brent, the international metric, at $45.77. Natural gas is trading at $2.66. Gold and silver both had a decent day today, especially silver. Right now, spot prices for both are up. Gold spot is at $1,986 an ounce. Silver at $28.69 an ounce. And even if the dollar should come back, folks, I still think there's going to be some relative strength even in gold and silver, in other commodities as well. So this is going to potentially be that scenario that I've been talking about for quite a while, where once this bubble truly starts to burst, and it's already in the process of doing so, but when the volatility and the violence of it really starts to explode, you're going to see major disconnects. Things that used to be correlated are going to be inversely correlated. Things aren't going to make sense. We're already seeing that now. We're already seeing it now. It's just simply going to continue. There's too much malinvestment in the system. There's too much distortion in the system caused by policymakers because they got to do something. Well, the something was to cause a bigger problem, as history shows us time and time and time again. So what do you expect is going to happen? It's going to be this complete mismatch of traditional relationships between financial and economic variables, amongst other things. And when you take all of that together with the social decline, the political decline, the economic decline, this is just a true recipe for disaster. This is a triple whammy. And this is global. And never forget that this was all taking place before the pandemic. I really can't stress that to this audience enough. I do my best to sound like a broken record on a handful of points. That's one of them. Do not forget that all of this decline, all of this decay, all of this disorder was taking place prior to the pandemic. How convenient a pandemic comes out to justify the unjustifiable across the board, across the globe, from federal governments to central banks. It's in your face. Pay attention. Uncle Sam's U.S. 10-year Treasury junk note is yielding spot 0.72%. What's the bond market telling us? Are they starting to price in inflation? Because it ain't growth. There's no way the bond market's pricing in any type of economic growth. Are they starting to price in inflation? We'll see. Time will tell. Interesting, isn't it? Your daily dose of the U.S. national debt, brought to you by Uncle Sam and the Federal Reserve screwing you over. $26.7 trillion. The official budget deficit for this year, and again, we still have the entire month of September to go through. The official budget deficit, $2.9 trillion. The actual budget deficit, which is what you really have to look at because that really captures the year-over-year change, which is added to the national debt, is at $4.2 trillion. As soon as the CBO, the Congressional Budget Office, came out several months ago stating their analysis that this year's budget deficit was going to come in at $4 trillion, I immediately told this audience it's going to be more than $4 trillion. It's at 4.2, and we still got another month to go. Buckle up. Thanks, Uncle Sam. You're going to pay for it. You already are, but don't worry. Tesla's up 12%. That's all you need to know. That's all you need to know. Another story unrelated, but something that is obviously very much a part of the social decline. That being the death of George Floyd in Minnesota. There are some court filings now, papers that have been submitted to the court, a motion to dismiss by the defense for former officer Chauvin, who had his knee on the back, on the neck of Mr. Floyd. And if the audience remembers, I always throw caution out there because the media is going to tell us the story they want to tell us. And in our system, and rightly so, you are innocent until proven guilty. And the burden of proof is on the state. They have to prove your guilt. It is not on the defendant to prove his or her innocence. That's a brilliant concept. And if you also recall, above and beyond my caution, if you recall, the prosecutor at the time of Mr. Floyd's death and of the subsequent protests and riots that were taking place, not just in Minnesota, but around the country and around the world, the prosecutor, the DA, came out and he too threw caution to the audience, to the people, because there's always more to the case than what meets the eye. It's easy for the media to hype up certain points. It's easy for quote-unquote influencers or celebrities or whoever has an audience and a microphone to get people all rowdy, all jazzed up, and to push a narrative and to start a movement. Now, make no mistake about it, it's still a tragedy that Mr. Floyd died, and I am not excusing the actions that these officers took. However, you have to look at what the DA is going to end up charging these guys with. Is it actually going to be a murder charge? Will they lower it? Because that will play into a juror's mindset. Did the DA overcharge? Well, maybe I would have convicted on manslaughter, but if you're going to charge him with murder, I just don't think there's enough evidence there. That plays in to their decision when it comes to the verdict. And when you look at some of these documents and what has been submitted by the defense, they indicate that these officers, the training that they underwent, clearly shows that that their knee on the back or the neck is proper protocol. Is proper protocol. As much as anybody might disagree with it, that was their training. So this is going to get hairy. You also have further video evidence and the discussion that these officers were having with each other as to why the officer kept his knee on Mr. Floyd's neck and back for as long as he did, was because, as they're claiming, as they were stating and discussing with each other, they were concerned about what is called excited delirium. Excited delirium. And this is something that many of you have probably seen on TV as well. When you have police officers attempting to arrest or have already arrested somebody, they have the handcuffs on an individual, but this individual, typically a man, is on drugs with the adrenaline of the situation, basically has, if you want to call them, superhuman powers, and can overrun the police officer or police officers that are there because of the drugs they're on and the combination of adrenaline because of the situation. We've all seen this on Cops or on a nightly news. This happens. I'm not saying this justifies what they did. I am just simply reporting the other side, because we got the one side for months. We got the protests, we got the riots, we got the stories. We discussed that here. I am not excusing what these officers did, that Mr. Floyd is dead, that they didn't act quick enough to provide CPR to him. I'm just stating the facts of what's going on here. Be careful, because once this case goes to a jury, if it even goes to a jury, I mean, this is the defense's motion to dismiss. So this is going to go before a judge. And that judge is going to have a big decision to make. And should the judge dismiss, all hell is going to break loose. Should this go to court and a jury acquits, all hell is going to break loose. It's not going to matter what the facts of the case are. That's how emotional this case is. It most definitely highlights a two-tier justice system when you have all eyes and all attention on it. There's no mistake about it, and there is a two-tier justice system in this country. But I just want the audience to be prepared. As this case makes its way through the court system, a lot of people out there think it's a slam dunk, that the DA is going to win, that these cops are going away forever and a day. Don't be so certain. Don't be so certain. So pay attention to that as well, because that could be a big story in the coming months, maybe coming weeks, depending on how quick a judge hears the case, hears the motion, and makes a decision. Even the trial itself, if the defendant wants a speedy trial, which is his constitutional right, if that's how he wants to go about it. So that's some of the news for the day, folks. Stock splits, the golden ticket is the question. Well, it appears so. Corporate America and Wall Street just can't seem to lose. Until they do, stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.